Hey, we just want to thank StreamYard for bringing the cheesiest music possible for this episode on the Pain Points podcast, where the world meets business. What's cracking? Darius, what's up, man?
Dude, this is good. I love it. I love the new setup. We're switching it up. Are we running with this?
Let's run with it. I think
we're running with it. This is good. Yeah, so we're switching it up this week, guys. We went fully remote, and so as you can see, Samson is in his extravagant home office, which is designed by his wife, and I'm in.
But I don't have the sweet LEDs in the background like you do.
Yeah, but I'm compensating for like 1983 wallpaper and everything else. So
this is the reality of the remote setup. Is you got to have a nice studio, but we do have some pretty awesome high quality video mixed with some great mic coverage and some really sweet lo-fi beats to kick off the podcast and get us started. Well, without further ado, what's going on, man? Welcome to the Pain Points podcast. First remote episode. We're trying to do this so that we can be more fluid. We can talk about things in real time, and we can deliver a really great quality product anywhere in the world, because sometimes our life is taking us in opposite directions and we can't always be in the studio, but we will be bringing the studio version on occasion when it makes sense.
Yeah, facts. We're increasing our nimbility score.
A new word that Darius brought to me last week. I think it's in the Urban Dictionary. I don't think it's officially there yet.
That's good. Well,
but if you actually look at English, though, how English was set up, it's just an amalgamation of a bunch of different languages, and that's why it's typically pretty nonsensical compared to most other languages, right?
Yeah, absolutely.
Words that you think would sound one way don't sound that way, which is why it's pretty challenging for non-native speakers to pick up. But unlike anywhere else in the world, we only speak English here, and everywhere else speaks multiple languages. So,
dude, I'm really loving all the stuff you sent over on the back end. I'm excited to dig in with everyone. So
I think we just jump straight into it. So there was a great clip floating around that I wanted to present, and it comes from Codie Sanchez. If you guys don't know who Codie Sanchez is, she's one of the thought leaders in the world of buying businesses and call it lower middle market companies. And so she had this great post talking specifically about how to build wealth. And I think if you're an entrepreneur and you listen to this podcast, or you desire to be an entrepreneur, part of that reason that you're looking to maybe take the entrepreneurial leap is because you've realized that the path of being an employee long-term is a very slow and arduous and not so profitable way to build wealth. And so let me pop up and share my screen. Bear with me as we try to master this new process. Boom, boom, voila.
Is for tax and it's for long-term.
Let's refresh that. You can't refresh it and play your sound at the same time. Come on.
StreamYard, you got to do better, man.
Real estate is for tax and it's for long-term wealth. It's where you go to have savings in tax and have long-term wealth, not accumulation, but preservation. So we go there to skip the IRS and we go to real estate so that long-term I have more safe assets. Stock market we do to beat inflation. So we want 10% sort of max per year. That's why we invest in the stock market. Neither of these two things, unless you have a ton of money, are going to make you rich.
Right. Let's get 20 million in one of them.
Exactly. If you have a ton of money, these two things are great, which is why most people who are really, really wealthy own a ton of this after they've made their money. The only way that you're really going to make your money is by starting or buying businesses. So in my opinion, this is where you put the $250,000 to $500,000 because you can have an infinite return on it. You can't make.
Right. That's good. So sometimes I think when we're on the path, you hear a lot about all the different things. Real estate, you need to own real estate, you need to own stocks. And I think when you're an entrepreneur, it's easy to get a little bit of maybe FOMO or feel like you're a little bit behind the eight ball, right? Because you're pushing so much money into your business, but it's important to not lose sight of the big picture, which is we're trying to ultimately build wealth so that we can parlay that cash flow into other stable cash producing assets like real estate, right? Or as an entrepreneur, you can leverage things like the SBA 504 program to buy real estate that houses your business. I personally don't think that being in the stock market long term is like the way to build massive amounts of wealth. It's a way to build a modest amount of retirement income, but it's not the way to build massive amounts of wealth. It's not the way to get to 20, 30, 40, 50 million dollars of net worth.
Mm. Yeah, I guess, when I think about right now where we are in culture, first of all, I love Codie Sanchez. We've been big fans of her over the last 3 years,
Yep.
longer than that, but at least particularly to us. I guess the question I would have for you to share with people is just how feasible is it to buy a business? Because I think people talk about it or talking about it, and it sounds good, but I think people don't have a clear picture on just how possible it is. And I think that'd be something I'd love to get your opinion on as someone who's helping people buy businesses.
Yeah, I mean, one of the things that I dislike about Codie Sanchez is she has convinced everybody that doing a no money down deal is the way to buy a business. And that's a way to buy a business, but I don't know if that's necessarily the best way to buy a business, right? Because it takes just as much work to operate a $250,000 dance studio as it does to operate a $5.5 million excavation company. And so I think it's important that you kind of distinguish between those two, right? Buying a freaking ice machine or a vending machine business is a totally different realm of entrepreneurship than buying a 50-person company.
Right.
So the best path or the best mechanism to do that, in my opinion, would be leveraging the SBA loan program. And if you're a listener of the show, you're probably a mid-career professional. You're probably somewhere between late 20s to 40s, and you have some career experience, which gives you a resume, which means you've probably stacked some cash, and you could parlay that into the SBA 7A loan program, where you can get up to 70% leverage and go buy a very profitable business that you run over the next 10 years. And when that loan's completely paid off and that company is, stabilized and cash producing, you're making a mint. I mean, and if you're only in your 30s, you still got 20 more years to probably operate that company. So there's a lot of boomers that are transitioning out that have built great companies that need people to step up and buy them. And they're not going to sell those great companies to you for 100% seller financing.
Yeah. Now, let's just say all the ducks were in a row. You find a perfect business you want to buy. You got your eye on it. You might even know the business owner, and it's just a perfect relationship. And this person is a mid-career professional. They have a decent amount in savings that can go towards their down payment on the financing. How fast of a period of time do you think someone could go from being that mid-career professional to going through doing all the due diligence and closing a deal and being owning the business and now having to operate it, if all the stars aligned?
Yeah, I think when people first get excited about taking the leap, they tend to look at a couple deals and they get really excited. And my response to that is always, compared to what? You need to look at enough deals in order to even have a semblance of understanding of what market is. Because the same thing happens when you start a business. People often jump into a business because it lands in their lap or it's what they know, but that doesn't necessarily mean it's the best business to be in or the best industry to be in.
Right.
And you can go out there and you can look up this data. If you're trying to figure out where the most profitable businesses are at, just go look up the NAICS codes, which is the NAICS codes, which are the tax codes that are out there to designate every single company. And you can actually see their standard cost of goods, their standard marketing, their standard profit margin, to get a better handle on which businesses tend to be the most profitable. Just because a business is doing a lot of top line revenue doesn't necessarily mean that it's very profitable, right? I've seen solar companies doing $2 million a year in top line that are doing a net $1 million in income, right? I've seen $12 million top line businesses that are like barely squeaking out 800,000.
Wow.
Right. So
yeah,
don't confuse, and contracting businesses, like, and contractors will love to tell you, like, oh, look, my revenue, we did 3 million last year. It's like, yes, because you're purchasing all the materials and you're pushing them through the business, which is a cost of good, which means you don't make any money, maybe a little margin off of that. But net, your actual profit margins maybe 10, 5% on businesses like that.
Yeah.
Or you can get into something like drywall or concrete, which have like 35 to 40% profit margins, right? So again, don't confuse motion and progress. Don't assume that the first business you look at is great, or what the broker's telling you about that business is accurate.
I love that. I put the like perfect scenario out there, and you being experienced, or like, there's no perfect scenario without saying it, and just skirted by it.
I think, Harvard did a study that said that the average time to buy a business is like 18 to 24 months. And that's because you have to go through so many deals. There's a lot of mispricing where it's overpriced and you can't make sense of the numbers. And at the end of the day, if you're going to leverage debt, leverage the SBA, which most of these good businesses are going to require you to do, even if you get some sort of seller financing, it has to be properly priced. It has to cash flow. And currently the market's pricing everything against like money market accounts. Like the seller might want $5 million, which might force you to bring $2.5 million down. But why would I put $2.5 million down into like a really capital expensive business when I could just put that into a money market account for like somewhere between 4 to 6%, risk-free, right? And so that's the hardest part, is mispricing on the seller's part, often led by CPAs, often led by brokers who don't really understand acquisition financing, often led by the seller's desire, because they Googled that, HVAC companies get 5x multiples on EBITDA with no consideration of how the next person's going to buy it. And that's what makes it hard, but it's all hard, right? It's hard to stay an employee for however many years. It's hard to start a business from scratch. Right. But if you spent 2 years consistently looking and you found one great business with all that effort, and you basically just leapfrogged yourself 20 years into the future, right? Because you bought a great business that's been around for 20 years, that already has cash flow, it already has employees, it already has processes, and it's just not being grown because the baby boomer's tired and he's happy making $1 million a year. Like, would that be worth it? Right. Or do you settle for a little, dinky $100,000 business because it makes you feel warm and fuzzy that you got a deal done? It doesn't really get you to your end goal,
Yeah. No, it doesn't. No, that's
so
good.
I can get off my podium now.
I love it. Well, let's transition over to the next story here, which is actually going to put you right back on a podium, though. Because
so I got I'm a CU buff. I played at the University of Colorado, and initially was very excited about Coach Prime. And after watching this weekend's football and kind of seeing all the NIL stuff kind of play out over the last couple of years, I've just seen that the biggest challenge all these major universities are up against is the fact that they're not building any culture. They're not building any loyalty to the brand. Everybody's there because it's about them and they want as much exposure, as much NIL money as they can possibly get. And I think that a guy like Dion is missing the mark. He took 41 transfers out of the portal this year, and I think they only allocated about 5% of their total recruiting scholarship budget to high school athletes, which to me is a huge miss. Because if you live in Northern Colorado, you know that whose kids are those in the background?
Those are my kids, guys. Excuse me, I have a clan of children.
He does. But if you live in Northern Colorado, you know that like people are very passionate about like Nebraska football, for example, in Northern Colorado. And these kids that play in high school, I've seen them skip over scholarship offers to go take the walk-on at Nebraska. Why? That's culture, right?
Yeah.
Colorado does a terrible job. Like, I don't know many kids that just grew up aspiring to play Colorado football because, number one, Colorado does a terrible job of keeping those athletes here in town, right? And they'll recruit from outside the state instead of recruiting right in their backyard, right? And building fan loyalty right here. So anyways, I made this post that was just some thoughts that were going through my head as I watched some of these major upsets this weekend, like Notre Dame losing. And I basically said, I wish high-level CEOs without any football coaching experience would get hired as head coaches at the D1 programs, because these organizations should be treated like elite companies. My prediction is Division II schools will become the predominant path for gritty high school football players who don't care at all whatsoever about NIL money. They simply just care about kicking the crap out of all of these self-interested NIL athletes. If I played D2 to start, and I transferred in, was a walk-on at the University of Colorado. Thankfully got put back on scholarship. But when I showed up, I hated everybody. Every day was war for me. I'm taking everybody's scholarship. I'm trying to hurt people. Like, don't come across the middle. This is my field. I run the defense out here. And I got a reputation for, being the scrappy dude, right? And that's what all these guys who get overlooked and underrated. And so, I think Deion's fatal mistake is he's not building culture by recruiting more kids. And I have supreme confidence that if the university started hiring less famous football people and more famous business people to come in and run their organizations, that they would probably have a lot more success. Like, one of the things that Nick Saban did really, really well at Alabama is he ran that thing like a superior CEO.
I mean, that would be interesting. That would be a very interesting thing to see. You bring in some high level CEOs, maybe what role would they play to the team? Like a
head coach.
That's a coach. Okay.
Yeah. The head coach is, he's bringing in the offense coordinator, the defensive coordinator, the special teams coordinator. He's orchestrating all the people, getting all the people in the right seat. And his job is to be the visionary, cast the vision, be the face of the brand, manage the major relationships, and ultimately get everybody on the bus towards this big picture vision, But right now it seems like, at least at CU, the big picture vision is, what's best for Deion and what's best for getting all this money and whatnot. And we forgot about what's best for the program and like winning and building status. Like, every bit of hype that they just had went out the window when they just lost like they did to Nebraska this last weekend.
Yeah, I mean, it'd be interesting how that can be possible with, like, because coaches, they have acumen on the game. I'd be curious to see how someone from the business world would transition into that. Not having,
I mean, you need to have some acumen, but at the same time, like, a good visionary CEO is like the number one generalist, right? Their job is not necessarily to be the best offensive. It's to go hire and recruit the best offensive coordinator, right? It's to go hire and recruit the best DC. So anyway, somebody said in the comments, this guy named Mark Dameron, who I don't actually know.
Zoom in a little bit if you can.
Yeah, he made this point about the story of Joe Moglia, who was the former CEO of TD Ameritrade, and how he got back into coaching. And then he went on to go build the program at Coastal Carolina from an FCS to an FBS program, which is pretty sweet. So I actually went and did a little digging and kind of got the scuttlebutt. Thank you, ChatGPT, for sharing that story. But the gist of the story goes like this.
All right, you'll have to the way it's set up, you'll have to zoom in a little bit. Actually, let's go. There we go.
So from 2001 to 2008, Joe Moglia was running TD Ameritrade, and obviously did a great job. When he got done there after the financial crisis, he stepped down from his role as the CEO, and he returned to his old passion, which was football. But what I love about this the most is, despite all his success and everything that he did, he actually took on a role as the new kid on the block, right? And he joined University of Nebraska, speaking of that, right, where he was an unpaid executive advisor for an entire year.
Yeah, that's the role I was thinking about, something like that, like where they get immersed in the sport again.
Yep. And so that was great transitionary period for him. And then in 2012, he took on the head coaching job at Coastal Carolina University, which was a smaller D1 program. And under his leadership, the team just blew up. And then he retired from coaching in 2018. He was having some health problems. But
That's interesting. I didn't know that because like I remember Coastal Carolina because they have those sick bluish green jerseys, the
Yep.
Wave or whatever. Yeah.
Yep. Exactly.
Yeah, they got hot.
So I think the lesson was, these head football coaches, I think at least like Dion, maybe if you're listening, take some notes, bro. Create a clear vision and a strategy. So I don't see a clear vision and strategy personally for like the Colorado program, as much as let's just be as hyped as we possibly can. Let's get as much attention as we possibly can. Yeah. Versus I'm not hearing a message that says, hey, we're going to become the most dominant, Big 12 football program in the Mountain West that this university has ever seen. And we're going to win X number of championships.
Yeah.
Right? That's not on the vision board. And there's a very clear lack of leadership. There's a lot of hype and there's a lot of people in a position of authority that have a lot of recognition, but when it goes all the way down to the players, you can see it straight up. I mean, Shadur is about himself. Shadur walked away 2 minutes before the game was over. Shadur threw all his teammates under the bus.
I think Homeboy got hurt, though, in fairness. I'm pretty sure he got hurt.
In fairness, 2 minutes left, but you hear the post-interview, he's throwing everybody under the bus. That's not a leader.
He did that?
So,
man. He normally is pretty solid. That's a shame.
That comes from the top down. Yeah. Develop systems, not just plays. I don't see like a really thoughtful offense being played.
Yeah, for sure. Defense got bullied. They got destroyed.
Yeah, and then prioritize long-term success over short-term wins, meaning like they're hyped about getting a recruit. It's like, let's be hyped about, I don't know, winning the Big 12 North, not being hyped about the big name recruit and the fact that Lil Wayne came out and opened up the show. Like, nobody cares. If you can't win football games, you're out.
Well, do you want to know what's great about you bringing this up is I was watching the closeout of the game and I was sitting there thinking when I saw Staub go in as their quarterback, and I was like, what will be interesting is I said to myself, I said, would the number one quarterback in Colorado go to this school? And I actually said to myself, he probably wouldn't, because he doesn't feel at least from my perspective, not being in the program, it doesn't feel like it has that culture of like, come be a part of something bigger than you, come be a part of this. And
yeah, one of the things that Coach Mack did in the 90s that was really important, and this gets overlooked constantly, is Colorado didn't have a real rival. Even Colorado State. He was the one that made Nebraska the rival to the point where, there's rules that they put in the weight room, and it was like, clean up after yourself, no chalk, absolutely no red. Like it was a thing that, like, if you played Colorado football, you hated those guys, right? They were your nemesis, and it didn't matter what happened the rest of the season. We were going to go whoop on them, or there was at least going to be a fight,
Yeah.
And that's a big problem, I think, just in general, is Colorado has no real tradition anymore.
True.
So which is culture, right? And it gets passed down generationally.
Well, what's interesting is I would say the same thing probably about CSU also.
Yeah.
What will be a bigger discussion, not for the pod, but for someone out there who wants to nerd out on this, is what happens in a state, like policy and culture wise of a state, impacts institutions and other things too. Because I would say right now, even as a state, if you look at political landscape and other things economically, we're kind of like, also seems like the state doesn't have a culture really. It's kind of like going through a transition. Are we going to go be California, or are we going to have family values and traditions and things?
Yeah.
So
I would agree with that.
That would be an interesting thing for someone who's really passionate about that. Let's hit the next one. I think that's great. So this next one I got that follows actually kind of relates to this. It is a letter I found floating around on X from a gentleman named Chris Munn, and it's called A Letter to Entrepreneurs. So let me pull this up for you guys. Boom. Can you guys all see that? Can you see that?
Yeah. Just got to zoom in on it.
Okay.
It's a little blurred.
Oh, okay. Boom.
Keep going.
Keep going. 1 second. There we go. Okay. You got that probably.
Yep.
Okay, so he says, "Dear future entrepreneur, entrepreneurship is not for you. Trust me. Sleepless nights, financial challenges, employee theft, missed family events, strained relationships, last to get paid, 2 a.m. emergencies, interest rate hikes, uncooperative employees responsible for HR, accounting, CFO, CEO, COO, hiring, marketing, rare vacations, awaken at 2 a.m. by thoughts about what could go wrong tomorrow, constant stress, unexpected expenses, employee turnover, financial uncertainty, personal sacrifices, long hours, missed opportunities, mental exhaustion, physical burnout, debt, bankruptcy, failure, shame, regret, lost time, lost money, lost relationships, lost dreams, missed deadlines, angry customers, unpredictable markets, unpaid invoices, legal battles, competitors undercutting prices, suppliers failing to deliver, rising costs, declining sales, struggling to stay afloat. Working on holiday, saying no to friends, not knowing if you'll make payroll, losing clients, facing lawsuits, keeping up with regulations, dealing with bad press, handling disputes, losing sleep over the smallest details." He then continues, "Isolation, self-doubt, questioning your choices, watching others succeed while you struggle, feeling like you're on a never-ending treadmill, the constant pressure to innovate, to be better, to do more, pushing yourself to the limit and then pushing some more. Living with uncertainty, never knowing what's coming next, always on edge, always hustling, no guarantees, no safety net. Everything is on you all the time." He then says, "If you read that and you still want to hear more, you might be ready.
Let's go.
And here's the truth. It's also beautiful. It's the freedom to create something from nothing, to turn a dream into a reality, to solve problems, to make a difference, to be your own boss, to set your own path, to create financial wealth. It's the thrill of the challenge, the satisfaction of overcoming obstacles, the pride in building something that matters, the joy of seeing your vision come to life. It's about growth, not just business growth, but personal growth, learning, adapting, becoming stronger, wiser, and more resilient. It's the opportunity to impact others, to create jobs, to build a team, to inspire, to lead. You could always let someone else take on this task, watch them fail and say, 'I knew it.' Watch them succeed and say they had it easy. It's easy to call plays from the couch. But if that's not you, go for it. Go with your eyes open, knowing what you're getting into. And remember, the road may be tough, but the destination is worth it." Bon chance, mon ami. Chris Munn, a letter to future entrepreneurs. I thought that was a really, really neat post to come across.
Yeah, that's great. I think that all of the beginning sentiments about business and entrepreneurship are accurate when you put it into the context of this is a win-lose type of game, right? It's a finite game, meaning that if you're losing, and that makes it very stressful. But when you change the context to it's just the game, and the only rule to the game is to keep the game going, it's not about winning and losing. There's a reason that there's that saying that every great business is a 7-year overnight success story. Because most people don't realize that it's like clockwork, man. And that's actually also very biblical, right? 7 years, our cells turn over 7 years in our bodies. The world was created in 7 days. We're supposed to rest on the seventh day. Like, that's a real thing. So I think when you just change the context of, even if you quote unquote fail, you've lost, and then somehow that determines whether or not you're worthy or not is the difference. And so if you can get through that, that's what stops people. Is like, well, what are people going to think if I fail?
Dude, I was talking to one of my friends, and he said he was talking about the fear of failure, and he was talking about how the Lord has really set him free from a fear of failure. And the way he framed it, he says, the gift of releasing the fear of failure may be the most powerful gift I've ever received. But remember what we listened to last week with Elon when he was talking about failure, and he was like, as long as it's not catastrophic, you can come back from it.
Yeah, I mean, the only real catastrophic is like death.
Yeah, or you take someone else's life, right?
Yeah, that's it.
Yeah.
So everything else is recoverable.
So it's funny. I'm trying to be mindful of saying so. And I just said it again.
Well, so let's go to the next one.
Well, let's transitioning on to the next story. This next story is actually, do you remember the company Allbirds?
I do. Shoe company, right?
Yeah. Well, I admittedly, I hadn't followed like them a lot, but I was a big fan of them. Like probably about a year and a half ago, when they were just crushing their branding and their content was in places that was sweet. They were doing I saw some interviews, and I was just like, whoa, these guys are on the right track. Well, something came up on my feed over the weekend where that might not be the case. And so I wanted to pull this up because I think the way your giftings are, you'll be able to make sense of some of these posts to forecast for those of us who aren't maybe more solid on IPOs and numbers and what earnings. And so I'm going to pull this up and read through this thread and a little snippet of this article. But apparently they're not crushing it anymore, and they're in some hot water. And let me pull this up, my friends. All right. Okay, share this. All right, can you see this right here?
Absolutely not.
No?
No, I can't see it.
You can't see it. My bad. There we go. Okay, you got it. There we go. Let's get this new setup dialed in here. Excuse me. I'm going to shrink my video and disappear. Boom. Okay, look at this. So now I know you can see that, right?
Yep.
All right. Okay, so this comes from Drew Fallon on X, and he says, Allbirds stock trades below $1 per share, or minus 100 million market cap. They're at 67 cents. So he says, most people just say DTC is hard when telling the story of Allbirds, but there's a deeper lesson in this story, one that I think every DTC operator should hear. Let's break down where Allbirds went wrong. So he then goes down. He says, a brief history of Allbirds. Founded in 2015 by Tim Brown and Zoe Zwillinger, Allbirds saw massive adoption quickly. They did a seed round in 2015, another Series A round of 7.5 million in 2016, hit 27 million in sales in 2017, and took another round of funding for 17.5. And then 2018, they reached unicorn status, which is probably when I first started hearing about them. Then in 2021, Allbirds IPO'd.
So they're saying they got to 100 million in rev? Is that what they're saying by unicorn status?
Yep, got to 100 million. Then went IPO in 2021, and an offering that raised them $300 million. It says the stock closed that day on that first day at $29 or up 90% from the IPO price. All things considered, it was a good initial run as a public company. Well, next thread. For the 2022 quarter, right after the IPO, says Allbirds posted year-over-year rev growth of 15% to 78 million with an EPS of 20 cents. Don't know what that is, but he says the losses were widening at this time, but quarter over quarter, but generally stable on a per-share basis when you zoomed out over the past couple of years, something the market was okay with. Then he says it was then the beginning of the end. However, cracks began to emerge almost immediately in Bird's fundamentals, most importantly, their gross margins. By second quarter 2022, Allbirds had lost 20 full points of gross margin. This is a death sentence for any business, especially a DTC model. Now, here's a picture here of their gross margin losses. Then it says the Q4 of 2021 earnings call was mostly positive. However, this call was the first time that the mentioned gross profit margin pressures from logistics and production costs. It would only spiral from here as the gross margin pressures began to drive massive losses. And so you can see here.
Yeah, so they went from doing like 50% gross margins to 36%.
And then the losses.
And that's gross. That's not net profit.
Right. And then you see the losses here on the bottom, the margin here on the bottom. It's really interesting. So then the pullback. With the tuning market and contracting margins, Bird had no choice other than to pull back marketing expenses. But by this time, it was too late. The real Bird killer had been set in motion several quarters before and was irreversible: inventory production. So when the company unexpectedly lost gross margin, they had to pull back spend, which decreased sales and inventory the company had bought and wasn't growing into. That had to be moved. So then he goes to the next point. they're still shooting themselves in the foot, or they're kind of caught in this trap now. Rising COGS and rising discount is a recipe for disaster. Gross margin mismanagement is what killed Allbirds, not the turn of the markets or anything else. The lesson in the Allbirds story is to protect gross margins at all cost. It is the foundation of your unit economics. And then he closes out by saying, Allbirds looks basically the same as it did 3 years ago as an asset, minus one thing, growth. And what killed them was not protecting their gross margin at all cost, as it's the foundation of their unit economics. He says, gross margin has mostly recovered, but what that signals is that no progress has been made. And fortunately, there's no clear path for them to recover as a public equity. And he just said, there's good growth and there's bad growth. If top line is growing, it can do so on top of a house of cards. Know your unit economics. So I pulled that in just because there was some lesson there, in particular what he's talking about, the handling of margins. And I found another article here.
Yeah, real quick before I jump into that, I just looked and said, who's the CEO of Allbirds? And it's a guy named Joe Vernaccio is the CEO of Allbirds. And he took over the role this year, March 15th, 2024, replacing Joey Zwillinger, who I think was the founding CEO.
Yeah.
And Vernaccio has a long history in the retail industry, has a leadership position at many global brands, including Nike, Patagonia, and Calvin Klein. He was previously the president of Mountain Headwear for 4 years and the VP of global product at North Face for 7 years. So I think they finally just made a decision, which is probably a great move, you know. Honestly, I mean, props to Joey Zwillinger. I mean, going from, you know, startup to grow up to mature to taking over and running a publicly traded company is
something to scoff at.
That's a lot. It's a lot of P&L to manage. And
we just read the letter, right? We just read the letter.
Yeah. So
it's a lot to go through.
I think it's important to, just for everybody kind of on listening to the show, like, you just kind of got to know your limits. Like, there's certain points where you're like, okay, this is getting a little bit bigger than my skill set. You need to grow your team, expand, or put somebody else in place who can actually run that. And that's okay, right? Like, entrepreneurs are starters and they're builders, but there's a point where you need to get to more maybe maturity where you have like a CEO to actually run the company for you, you know?
Mm-hmm. Yeah, I mean, yeah. So the other part I did share that my friend sent me was just the role that humility plays in that success and that fear of failure, like knowing, like you said, the knowing of your limits, but the humility to bring someone else in. Like, if you're worrying about getting the credit per se, not saying that he was, but if you're worried about that instead of the outcome, which is building something that's successful and able to impact for years to come, yeah, you could end up sticking in the role for too long when you should get somebody out.
Yeah, that's tough. I mean, it looks like they're on the come up and they're getting back to even. So it'll be interesting to see that story. But I agree. I mean, the discount pricing model is just a race to the bottom. You know, we've seen it before in companies where every single month they're running an end of the month special. And then eventually it's like, well, I'll just wait till next month because you guys run this every single month, you know?
Well, there was something in the article that I wanted to share that I thought was just very interesting. They just gave a better picture of the numbers. Net revenue in Q2 of this year, net revenue decreased by almost 30%, down from 70 million from last year. And then, where is it? Excuse me, just a second here. Adjusted EBITDA for Q2 of this year showed a loss of $13 million, or a 24.9% improvement from the $18 million loss. And so they've just been in this constant battle of like, and so it's just, which is wild, man, because they were doing so well. I
think it's interesting too, though, prior to 2020, everybody was all about growth at all cost without a real consideration of EBITDA. And I think that's obviously changed, right? It's like cash is king, cash flow is king, and nobody can live off of negative EBITDA for too long, right? Without having to continually raise money. So it's a sentiment in the market that's changed as well. And then, he's saying it's nothing to do with the market, but I kind of disagree, because just when your overall investor sentiment changes and you're a publicly traded company, the markets can be easily influenced to move your stock price one way or the other. But to be under $1 today, when they came out at a $15 IPO and then got up to almost 29, 30 bucks on opening in the first couple of days is pretty impressive.
Well, I got this. This next one is going to be about the Fed. So you pulled this in. I got it pulled up right here for us.
Cool. Yeah, you want to read it, and I'll give commentary over it.
Mm-hmm. So
this was interesting to me because I've only really been tapped into. I love studying the markets and the history of Fed policy. It's very interesting to me.
Yeah.
I didn't really know this history, so this was pretty cool.
Well, this came by way of Game of Trades on X, and they led with the Fed is making the worst policy mistake since 1929, folks. This is not going to end well, a thread on this. So they got this picture here, the S&P index, and they're pointing to, you need to pay attention to that dot.
Yeah, they're pointing to the peak of the market is what they're trying to get at.
All right, just a second here, friends. My monitor went off on me. Excuse me. Okay, now we're back. It's funny changing the remote setting. You have all these little things you got to now be aware of when you make moves like this. All right, so next portion here of the thread. The Fed has held interest rates steady for the past 12 months. This last happened right before the 2008 financial crisis. At the time, Fed Chair Ben Bernanke expressed regret for not cutting rates sooner. Got a picture of Ben so we never forget his face.
Yeah, you can see the fall from grace right there. Go up real quick. Go back to that chart. Okay. Yeah, so you can see 2002, 2004, 6, 07, 08, boom, and then fell off of a cliff.
All right, they continue. Back then, the Fed kept short-term rates above the economy's neutral rate, resulting in tight monetary policy. This restrictive stance persisted until the recession began in December 2007, marking 1.5 years of economic pressure.
Yeah, and just for perspective, they're saying that the recession started in December of 2007, and for it to be a recession, I believe it's 3 quarters of successive downward pressure for it to be called a recession. But the markets didn't really collapse until September 29th, 2008, when the Dow Jones fell 777 points in a single day, which at the time was the single biggest intraday fall on record.
Roger that. They continue. Interestingly, this wasn't the first time the Fed made such a mistake. In the late 1920s, they also kept rates too high for too long, contributing to the onset of the Great Depression. In hindsight, the Fed acknowledged they should have acted sooner. That's the second time now it's been iterated, right? We should have cut rates sooner.
Yep.
Okay.
And that's, we all know what happened in 1929, right? The Great Depression, the big stock crash. And so I believe what he's just getting at here is, we're setting up for a similar type of story.
Fast forward today, the Fed's short-term rate has been above the neutral rate for 2 years now. Monetary policy remains tight, and the risk of another policy error are increasing. Initially, this was necessary to curb the 2022-2023 inflation, but now there's strong evidence that inflation is stabilizing, so the Fed's continued restrictive stance is likely a mistake. And then at a recent Jackson Hole meeting, Powell indicated rate cuts would start in September, but rates won't reach non-restrictive levels until April 2025. With economic indicators already deteriorating, this delay could prove costly. This is where our monthly macro, that's where they promote their newsletter. So
yeah, gotcha.
You got them. Go read Game of Trades.
Yeah. All so right. the prediction, we got a Fed meeting coming up here I believe it's this week on the 12th. And they've already predicted they're going to do a 50 basis point cut or 0.5%. I don't know if that's already priced in. It looks like it's being priced into the market. But historically, when rates get cut, the stock market falls. And so it'll be interesting to see what happens as a byproduct of that.
So let me ask you a question. So why in these moments is the timing of not cutting soon enough? Why is that precipitating such negative consequences?
I mean, the simple response is they tend to overcorrect one way or the other. You can't really control it, right? They're trying to control something that I don't believe is ultimately controllable. This whole soft landing sentiment.
Mhm.
But the biggest challenge right now is just the cost of capital. So anybody who's servicing these notes. So just like a small example in the world that we live in, like in SBA, prior to COVID, your interest rate was like south of 3%. Today, that same interest rate is like 11, 12%.
Mhm.
So it's gone up nearly 4 times. So you think about that pressure, that interest rate pressure on a small to medium-sized business.
Mhm.
Now just extrapolate that out on a much larger scale across debt, across corporations, the federal government, local municipalities, and all that pressure, that increase in operating expense then gets passed on to the consumer, right?
Yeah.
We see that come out in, the cost of groceries increasing 4x over the last 2 years, right? So people start to pull back the purse strings and they're more cautious, which is why you see things like cars dropping greatly in their value because nobody's buying them, right? There's all this inventory that's been built up and nobody's buying cars. So now they're just sitting there. So in order to offset that, they have to lower prices, right?
Mm.
And that goes over to people aren't eating out as much. People aren't going on vacation as much. They aren't spending in the economy, which we've built our economy since World War II as a consumer economy. So as a consumer economy, it's heavily reliant on people spending money, right? So, and we're going through an economic kind of cultural transition as well as we move away from being a mass consumer to a mass producer. But it's going to be rocky. And then you also, you got to consider going into 2025, you have a lot of this commercial real estate debt that's coming to maturity. And so a lot of these loans which most people don't know, are going into special servicing right now, which means they're kind of been red tagged or red flagged that there's a potential that they might not be able to pay their bills and that the bank is going to need to do something to intervene, like take back the property or something to that effect.
Mhm.
There's also a lot of this debt that was in commercial real estate was a lot of floating rate debt, which means the interest rate can change, right? And so then you have to buy what's called a rate cap. So buying a rate cap requires more money, right? And so all you're doing is just limiting the fluctuation. So you put all of that stuff into perspective and you just see all this kind of pent up potential, explosion of failures of debt and business and economy and savings, etc. And that's what sets off an actual recession, right? Mm. And so that's what he means by like a day late and a dollar short, is they've waited too long and they're not going to just correct the market straight away. They're going to keep holding that down through the first quarter of next year. And it might be too late. Like I told you, they identified that the December 12th, 2007 was when the recession started. The Dow Jones didn't fall 777 points until September 29th, 2008, right? It started to correct, but that was the largest intraday fall on record. And I know that because I was sitting on a trading desk when that happened. So that's what happens as a byproduct of that. Yeah. When that happens and people feel super poor in their daily spending and they watch their 401ks and retirement accounts just evaporate, then we have a recession.
That's good, man. That's not good, but that's good. Good breakdown.
But it's honestly healthy, right? And so this is why you hear guys like Peter Schiff who are, fanatics about small government, laissez-faire, power to the people. The government should not manipulate interest rates. We should just let the markets correct and let the whole thing, reset. So.
Mm-hmm. Well, as we transition to the marketing content portion, just real quick, how does the entrepreneur need to be handling that thread we just went through? Because you can approach it from a personal level, but maybe from a business standpoint.
I mean, the only way to do it is to move through it. So you need to be prepared for the worst and hope for the best. I'm trying to do that the best that I possibly can. But 90% of what we worry about never happens, right? So often what happens is paralysis analysis, and you get stuck. The market's going to change. People will come and go from the game. It's going to be hard. You just got to be ready to negotiate with your lenders if you're leveraging debt and you're getting into a tight spot. Be creative with your marketing. Keep spending on marketing. People are still spending money. They're just more picky about what they're spending money on. And so it's not the time to turn down your marketing. It's not the time to turn down your sales. Be cautious of, your operating expenses for sure. But you just have to also still be consistent and focus on growing. Because if you're going through it, everybody's going through it.
Facts. Well, on that note, it'd be time for you to get really creative.
Yeah. So to our favorite part of the segment.
And so this piece here, today, we're not necessarily looking at ads, but we're looking at right on cue here, content that could actually, one that hits a spot, but also could be leveraged in a different way. Like just to say you had a product. And so we're going to start with this first one here. And let me share this. And
this is my favorite part of the show, by the way.
Okay, so this one comes from if you were
that's Jib.
Okay, hold on. Hold on. Yeah. So if you had let's just say you had a product where you were making socks in the United States during this time period, like we're talking about, you can get creative and pull off something like this, and it comes by way of this guy. The one who posted it is Ichigo. I ain't even gonna try the last name of homeboy over here, but he says Temu literally gives you what you pay for, and so we're gonna pull up homeboy here. Can you see that properly?
Yep.
So this is why you should never order products from Temu, because my wife here tried to order some nice Disney socks for our upcoming Disney trip, and just take a look at the things that came in the mail. It's gonna look normal at first, but you'll see what's wrong with it. So look, we got Chip. He's so cute, right?
Froze up on us. Oh,
you take the flip. Oh, that's Chib. That is Chib. And then, oh look, Mickey Mouse. He's looking a little derpy, but still you can tell it's Mickey. But according to them, he's Mikey. Minnie, yeah, she looks good. No, that's Mimney. That's Mimney. Donald. Okay, he actually looks pretty good. Yeah, that's definitely Donald. Or maybe it's Toonade. Don't that one. And then finally got Piglet. Cute little Piglet. I wonder what his name will be. Oh, it's Big Eat. It's Big Eat.
That would be a killer ad.
Like,
for
why
not doing that?
Yeah.
Why you need to hire us to build your custom socks?
Yeah, dude. Like, stay here. Stay on our shores. This next one is an example of tough love. I don't know about the placement of it. We can pontificate on what you can do with it, but I came across this one and I thought was really funny. And let me go. Boom. There we go. I forgot to give you the caption. My bad, guys. It says tough love in 2020, an excellent example of tough love in 2024. It's there we go.
This is Creed.
She's running behind the car.
Yeah, so the daughter says, "Who is this? Can we change it?" And dad is like, "You're done. You're running from
car.
her." Yeah,
you can run home.
Yeah, and so there's just a lot of different things you can do. And then this next portion, I found two clips where do you remember a couple weeks ago we were talking about, you may not remember this, but a couple weeks ago we were talking about the rise of older creators and how it's going to create a space. The current landscape of content creation and advertising creates a space for older creators, if they realize it, to actually jump in and participate. It's not necessarily a young person's game. And I came across two clips of people who are a bit older in age, and they're sort of riding this sort of Gen Z language wave but it's blowing up their respective businesses, and they're getting attention. So this one, all right, this one is a company called Curry's, and they decided to jump on the wave. So this is one of two.
Are you playing something? D.
Mm.
Are you playing something?
Yeah.
I
Oh,
got
you
nothing.
can't see it? Oh, my bad.
Say less.
I was just like vibing out over here. Sorry, guys. You got this now? Can you see that?
Yep.
Oh, sorry, my bad, team. All right, so we got Curry's here. Now, when I say riding the Gen Z wave, what I mean is they're older creators showing cultural relevance by trolling the language used by Gen Z.
Yeah, okay.
And it's breeding this attention for them.
Brett Summer at Curry's, my guys. Our offers hit different AF. This microwave ate. Left no crumbs. If you've got the guap, a pizza oven is peak flex. These are giving me life. No gas in. Go full Brat Summer and drag all your friends who only own fugly barbecue units. It's serving. Need a new phone? I'd bet. Say less. This one's bussin' skibbity toilet whiz, and the WhatsApp access is sending me. Look at the way he hoovers. Very understated, very subtle, very mindful, very demure. This air fryer is the GOAT. On point cash with that low key drip to have all your guests saying, yes, slay queen, he cooked.
Okay, so there's one more here. This lady, she does it, and even I think she does it just as well.
That's so good though, because what they know is that generation needs all their product and supply.
Exactly.
And so they're just making fun of their disconnection.
Mm-hmm.
And then it's even funnier because he has a great English accent, right?
True. And so then this lady here, so we got the department store or the appliance store that appeals, and now this lady, they have a like a bed and breakfast. And so do you see her face?
Yep.
Okay, you probably can turn her volume up. She's a little low.
She's got a mic.
Yeah. Gotta get her. Any luck?
Yeah, you got to go even way up.
Jeez, lady. Hold on. She's gonna get in the way of me trying to share this. Let's see what we got. Can you hear that?
Yeah, it's super low though.
Oh, it's gonna mess around and ruin it. I can't. That's as high as it goes. I guess when you have headphones on, it's different. Oh, well, either way, it'll get lost in if you can't really hear it. But she does a similar thing, but she's talking about the bed and breakfast, and she's got a bit of a drier voice as opposed to the gentleman who's a bit more warm.
Yeah,
and she doesn't move really. She just stands there stationary in these changing environments, and she's just like, this is totally for Brat Summer. And but it's an interesting thing of how, just how you can use, to your point, you can use language, you can get creative. Let's just say we find ourselves in a situation, you can get creative and still reach people. The tools we have available today are beyond.
Yeah, I think that's the nuance of entrepreneurship.
Mm-hmm.
Is the rules of the game are always changing, and so how quickly can you pivot? How quickly can you adapt? Humor is obviously a great way to break through the fourth wall with people.
Mm-hmm. And then, okay, I got one more for you. One more for you guys. This one is when you triple check your email before sending. Now, this one could be something related to some software you designed or a productivity product, and you could appeal to that target audience this way.
You can't get over there fast enough.
So it's just like you could totally leverage your maybe you have a productivity product that you made or something that never be Andrew ever again, right?
Yeah.
Those things like that. And so it's just great examples of how to reach people and leveraging these tools that we have today, in particular content creation, as opposed to advertising. Content creation can actually end up being the piece that levels you into greater, more effective advertising spend. So
Yeah, absolutely. That's a big difference right now is people are publishing on social media, like they're checking the box, but they're not being very creative with creating content and thinking about what the market's calling for, you know.
Well, it's because it doesn't come as fast, you know. It takes a little bit more time to ideate, to produce, to really look at what's hit, what works. Am I communicating properly? Are not all of your ideas are good, and do you have the right people around and willing to take the time to validate an idea and be like, oh, this is good? You just assume.
I think they're also just not testing quick enough, right?
Well, I was just about to say that. I was just about to say with the ideas, you got it, you make it.
One of the fastest ways to test content is paid media, right? And so you put it out and you can quickly get reach and see if people are responding to it. You can quickly publish it on TikTok or Instagram or whatever and see how people react to it. So I think people just need to do more. They're definitely not doing enough.
Yeah. All right, last two stories here. We got I got them queued up right here. We've
been laying off the politics a little bit, but I saw these two posts in the last week, and I thought it was important for us to at least put it on everybody's radar because it does affect us as business owners, and we are a couple months away from an election.
Yeah, facts, big facts. Let me change my screen here so you can view it along with us. And then we got
come across the border. The paperwork that they force ICE to fill out is to ask one question.
Who are you voting for?
No.
No.
Why did you come to America? And I gave you pictures of this. Why did you come to America? And all the people say, I came to get a job. And then they say, okay, if you're going to work in America, sign this piece of paper that says you promise to pay tax if you get a job. You know what our government does? Gives them a social security number.
Oh, yeah.
Hang on.
And a driver's license.
Then they say you got to go get a driver's license. When the people go into the driver's license bureau,
they get registered to vote. No,
they get a driver's license. They go, I need an ID. They hand them a social security card. The person automatically thinks and does not check if they're a real citizen. The government doesn't release the list of the people's names. They have merged motor voter. And what happens is that illegal literally gets a driver's license, automatically gets dropped into the voter file. And when the license shows up a week later, here comes the voter registration card. So the illegals come across the border.
And that's exactly what's happening right now. And that's why people are up in arms about a bunch of illegal immigrants coming across the border.
Yeah. Wow.
So I didn't spend enough time to really validate that, but we all know that our voter registration is linked to our driver's license.
Yeah,
that's where you go and update that information.
And there has been enough people pointing out, so regardless of whatever way you feel in listening to this, there are tons of people pointing out that over the last several years that people are going from illegal to citizenship privileges and status in no time at all, and it's happening right under our faces because most of us are disconnected from that process anyways. We are citizens. Like we're not in those rooms. We're not filing those papers. We're not in the same spaces because we have that right already. We were born with it. And so you don't even have eyes on the spaces where the stuff is happening. But enough people are coming out to say it to where, like, as much as you might not want to hear about Republicans or conservatives, it's right in front of us. Yep, it's right in front of us. Last one here.
Follow on to that.
Follow on to this.
Everything you're experiencing today didn't happen overnight.
Yes.
And
Tim
this
Young.
post- Yep. You want to
Tim-
share it on the screen?
Oh, you ain't got it? Oh, we got to do it. Okay. I promise next week, guys, I'm going to be much better at this maestroing. All right. So Tim Young here. Tim runs his mouth on X, and you got to, it says the perfect summary. You want to kick this off?
Yep. It says George Bush, Bill Clinton, Barack Obama, Joe Biden, and Kamala Harris have held power for 28 of the last 32 years. Yet all 5 of them are blaming Trump. And even better, they claim to have all the answers to fix America's problem. You can't make this stuff up.
Can't make it up.
Yep. So if we want to change it, get out there and vote. Use your platform like we do, because the media machine is doing a heck of a job of helping people conveniently forget what's happened over the last 32 years. I mean, you 32 years ago, I was friggin' 6, right? So it wasn't even on my radar. It's really only been in the last 20 years that I've been paying attention to it. So I'm awake enough to know, getting baptized in the deep end of the pool in 2008, the policy decisions that have been made are giving us exactly what we voted for.
Yeah,
So-
man. To think about this from the perspective of it's really hard for people on the left per se to they're so ingrained with, or so, I want to say, overexposed to all of this media that is like Trump bad man, that it almost, I don't want to say how it renders them, but they can't really even compute that notion of like, wait a minute, all of these are the same people having the same idea, having the same strategy, the same philosophy, same practices, the same network, and they can't even really see, unfortunately, that no, what Trump represents, although not perfectly, is a clear changing of the guard.
Yeah.
And whether you like him or not, it's a changing of the guard that is only going to last 4 years, but actually might be a shift of a complete changing of the guard that the nation needs, breaking away from the 30 years of the same people, the same. Yeah.
Yeah, and if you look cyclically, I mean, we're coming up to the end of a 100-year cycle.
Right.
It's also just a shift, culturally, away from radical individualism back to what's better for the greater good as a whole. And I think that a lot of people are being flipped from their normal voting pattern to maybe consider Trump for that exact reason, because they are awake to the fact that for the last 32 years, the libs have been in control for 28 of them, right?
Yeah, it's going to take a lot. I don't know what's going to happen this November, obviously, but I think the one thing I see is it's really hard to change people's minds, and people are emotionally they've done such a great job of getting people emotionally attached to their in opposition to Trump.
Yeah,
because it's not logic. Like
No.
the logic is it's emotional, and obviously, honestly, it's spiritual. But so we'll see. But to our friends out there who are left leaning, who are Democrats, who do have that wherewithal to wrestle with some of this and create spaces to discuss, more power to you, and bring your other friends along, because you have to break from that emotional disposition. They want everyone to say, I hate this man. I can't believe you would, So
Right.
I actually was. This is close. I was actually with I was with someone recently, and they, they're in the faith, and they said they couldn't vote for him because of the way he speaks, and I gotta have a follow up conversation with him, but I want to encourage him to wrestle with that a bit more. It's like, so you're offended at the way he speaks, but maybe not so much offended at a party that is for doing whatever, questionable practice against the children and babies, and
I think that's part of the issue, though. It's like offendedness,
right?
Emotion. So they're just letting their emotions go. Oh, it's just so offended by it.
Yeah.
Like, well, get over it.
Yeah. Get over it and consider looking at face value. Right. It's going to be better for you, your family, your church, your community, your nation, your pocket, like your business, So
It's funny, real quick on that note about the media machine. there was an article on Market Watch today that I was going to put up here, but I didn't. But the headline was frustrating, right? The headline says Trump threatens to jail adversaries in escalating rhetoric ahead of Tuesday's debate. And basically what he actually said is, if all this stuff is true, I'm coming for all of you. And I'm putting you all in jail. That's what he said. But they make it sound like he's just like, if once I get in, I'm just overcoming any law that's in place. And I'm just going to randomly arrest people because I feel like it. That's what and that is our problem.
That's bad.
So
yeah.
We'll end on that note.
Roger that, man. Well, man, great pod today. Thanks for sitting down and chatting with me as usual. I'm not with you in the same space, but we're with all of you. We appreciate that.
Yep.
Well, until next week, guys.
Peace out.
Take care.